There is so much rubbish out there when they talk about the imbalances in the market. There are traders out there telling you how you should be trading, what you need to be looking for. Now, in this channel, I'm going to share with you the truth. I'm going to show you the real way to trade and use imbalances. So stick with me in this video today, and I'll go through how you need to be applying the imbalances in your trading going forward this year, 2023. Now, many are saying that you can't use the imbalance for a strategy like the bias in the market. Now, I'm here to show you how you can use it as a bias. But yes, we will combine different techniques with understanding market structure, giving you that trend direction. But in this way of using imbalances, I will show you not only can you use it for your reversals, understanding the entry in the market, but also for a bias, a direction in the market for your targets. Now we're going to look at this previous move down and the current move up, and how you'd use the imbalances on this previous move down for a bias to the upside. Now, the first thing you have to understand is we work in trading ranges. The market works in a range. And if you understand that the market at this point here, let me just show you. If we had the market sitting here, looking to our left, the trading range is going to be from this swing high to low in the market. That is my trading range. That is where I'm expecting to see price head to. So how would we look for an area of imbalance? First, is understanding the imbalance in the market itself. An imbalance is going to be where we see price leaving behind an area of the market where we've seen more buyers than sellers, or more sellers than buyers. Now, the area we're talking about was this solid bullish candle from the high of this wick to the low of this wick. This leaves this move in the market, which is a bullish move, and leaves the body of the candle. Remember, the body is where we're going to draw our areas of imbalance. And it's this area where we're going to have a leftover imbalance where you're looking for the market to be filled. Yes, a use of the bias is different how I'm going to teach you, but you wouldn't be looking for the market to come straight back down to fill this imbalance. That's not how it works. So I'm going to share with you how this would work to understand the use of imbalance as a bias. Now, there's many more videos in this channel which will help you understand different ways of trading with the use of supply and demand, with the use of the change of character, and the use of market structure when we're understanding structure in the market. But this video is to teach you really the concept of understanding the use of the imbalances, not only for when looking for entries, but also the bias in the market. So let's say this is my swing high in the market, and we draw this off as a swing high. This is my swing low in the market. After we identify here, we have a structure shift. The market makes this swing low, we break to the upside. That is a market shift. And what's also going to leave behind is an area here of demand. But we don't need to go into that today. That is just a understanding concept of a break of structure is going to leave you a demand zone. What we need to understand is how do we use our areas of imbalance? How do we use that to our advantage for bias in the market? Well, we're going to look for, once we see price at this area on the chart, we're going to look for our previous imbalances to the left. So we did have an imbalance here. Now that imbalance was removed by this big bullish candle. And you're going to find an imbalance will leave another imbalance when it's removed, just like you would with an area of supply and demand. Remember, when we see an area of supply removed, it will leave an area of demand. Just like we saw here, we had an area of supply that was removed and we left an area of demand. So the imbalance zones and supply and demand zones are very similar. So we just remove all this. Now, when we see price breaking up, this is our last area of imbalance. But we look to the left, we look for areas of imbalance still left over. Now, the only imbalance I can see at this point is this area here. So we mark this across. This was the original move of the imbalance. You can see here we have, this is our last low, or the wick high of this candle, and this is the low of the wick on this bearish candle. This body is what left over that area of imbalance. Now, price did come into this imbalance. We actually even created what we call the manipulation into that imbalance, and we fell away. So this is a way you can actually use an imbalance for an entry. But what I'm showing you now is the bias. Now the leftover imbalance we have now is this zone. And this is where we expect price to want to go to next. And you can see where price comes back and continues higher, and eventually we feel that imbalance. So your bias at this point, once we broke through, let me just quickly draw it out again, this imbalance here, and we continue to go higher, your next gravitational pull area, okay, where we're looking for a bias in the market is to this next imbalance. And that's where price went to the pip, okay, to the pip to fill that imbalance. Now we didn't close through that imbalance. Many traders will see this as a fill, and now they're going to say the market's going to drop to the downside from here. But that's not the case. What we're seeing now in this trading range is price to continue in a bullish movement. We're creating higher swing highs and higher swing lows, an uptrend. That's where you need to understand the use of different techniques. You need to understand your market structure here. Now we can also look back in time here, and we're also going to identify there's another area of imbalance here, left over. This small area of imbalance is still valid. And this is our last area of imbalance that we can draw. So once we see a close through this imbalance in the market, which in fact happens on this bullish candle, to show you, let's go closer into price. We close at, so we spike through, we close at it, we hold below it. Look at how price respects this area of imbalance, this high. Eventually we close through. Now the next area we expect price to go once it closed through. This is where you can understand the use of the bias in the market using imbalance zones. We go straight for this area of imbalance. We close through it. Once you close through an imbalance, there's no more imbalances to the left. The only place price can go is the previous swing high. Where did we go to on this candle? We wicked through the swing high. So that's how you can use the imbalances as a bias. Once you understand, we see the reversal here, the break of structure. So if we was to now map the same thing on the current price, and we did the same technique here, I'm not saying the market's going to come down here, potentially we could still go higher. But if we said that the current high in the market is this high here now, current price sits here, looking to the left. Where do we have our swing? We have a swing here in the market to this swing high. Yes, we do have this swing low, but at the moment, the market is only pushing up, pulling back, and we're just now at this swing low. So this is our current move in the market. And let me just now mark out from this area, we're going to mark out areas of imbalance. So here is our first area of imbalance. You can see the market bounced off the 50% and we went up where we actually manipulated this high here. And obviously we took out the high to the left here. Now this imbalance is half filled, but we still have this imbalance left over, which means we still want to see this imbalance filled fully. And that's where we're seeing price now heading towards. Now below that imbalance, we have another imbalance level here. So we have another imbalance below. So if we were to see it close through this level, this imbalance zone, where do you expect price to go? Now, leave a comment below and tell me where you expect price to go next. But at this point in the market, we had this low here. We're now at that low. We have another low below here in the market. And again, we have another low here. But my current trading range at this point is going to be from this high to this low. Now we've taken this low. So that's how you can start to understand where imbalances are in the market. And we can even go closer into this and understand for a bias, what do we have here in the market? A very small area of imbalance. And we had another imbalance level here. So what happened here? We created a swing high. We went wicked through this imbalance. We didn't close it. And then we see this big bearish drop, removing this imbalance and this imbalance. So if we're seeing we close through those imbalances, where do we expect price to go next? To this imbalance. That is how we can use it for an advantage of understanding market direction with a market bias. And remember what I said, when we see a imbalance removed, as we saw down below here, it creates its own imbalance, just like the supply and demand does. And there we have an imbalance created after we removed this imbalance and this imbalance. Where did the market come back to? Now look at this. Once you understand the usefulness of an imbalance bias strategy, you can identify here, let's get my drawing tool, that we filled that imbalance here. We then wick through again, but we never close through, and we create this lower high, and we continue to this era of imbalance. So I do hope this has been insightful for you today, understanding how you can read the imbalance, using it for a bias in the market once you understand the techniques that I'm sharing in this video today. Hopefully it's sunk in this video how you can read the markets just using imbalances. Now, if you have enjoyed this video, don't forget to give me that thumbs up, and popping up right now is a video to give you an easier way to find your supply and demand zones. And combined with this strategy of the imbalances, you are going to find 2023 a much more profitable year.